Hey investors, welcome back to Fiscal Voyage. Happy New Year's, guys. I'm sorry I haven't made any videos the past month or so. I've been very busy learning how to day trade. Right now I've just been consuming books, videos and things like that because I had a friend of mine that I just caught up with sometime in November, and he was talking about he's learning how to day trade and he's making some money, and I was like, oh, maybe I should start learning too. And I've been I've been actually, I'm right now in paper trading, and I've been had some bad days and had some good days and things like that. So I'm learning, and it looks like I'm starting to learn as I'm getting. The past 4 days has been positive. The past 4 trading days has been positive. So I'm learning. So I continue to watch more videos and read more book on day trading. So I'll start making some videos later once I become a little more experienced. But right now, that was why I haven't been making any of the videos the past month or so, is because I've just been consuming information about day trading, and I'm very excited for that. So guys, I'm sorry again, but stay tuned for that. A lot of good content is going to come out with day trading and long-term investing as well. So I want to put all of that together. But in this video, we're going to talk about some of the stocks that I covered throughout the year last year, and we're going to go over. They actually have some very good days today, and I'm going to cover 2 stocks that I've covered before but still present great buying opportunities, and I've been buying long of these 2 companies in recent time as well. So let's get started with those, but first, if you're new to the channel, make sure to hit that subscribe button. I like to cover dividend stocks, long-term investing, and maybe in a few months day trading as well. But if you're new to the channel, make sure to hit that subscribe button, and also check out my free ebook in the description below. So let's get started. So first, let's look at some of the stocks that I've covered in previous videos. First off, ABC, AmerisourceBergen Corporation, is a pharmaceutical company. I covered this stock around, I think when it was around $80 or so, and you can see right now it's $106, and it had an outstanding day today. 8% is because they're buying Walgreens, and Walgreens is another company I talked about here. Let me see if I can find it here. Walgreens is up 4.5% today, and I've covered this stock as well around the high 30s area, and right now it's up, and I think it's going to continue to run up because it's very undervalued. Walgreens, it has a great dividend yield of 4.5, very low payout ratio. If we go over here on the Seeking Alpha into the dividend section here, you can see it has a payout ratio of only 38%. So the dividend is very well covered. They actually increased it in 2021. It wasn't a big increase, but it was a nice increase overall. Another company that's up today, I covered this stock. I'm very big in I'm very and up as well. I think I have a price around $17 or $18. And I bought it when the dividend yield was around 6%. I think it was like 5.8 or 5.9 or something like that. And as you can see here, it had a huge day today, a 6.6% increase today. Again, this stock is still, in my opinion, still undervalued. I'm not personally buying more shares because it's kind of a big position in my portfolio, but I'm very happy with the position. But I think it still has room to run. I think this is a stock that's around $30 to $35. And in the meantime, while you wait to get to there, you have a 5% dividend yield, and the dividend payout ratio is only 22%. So outstanding dividend yield with a very low payout ratio. Some other companies I covered as well, Prudential, PRU, stock is up almost 6% today. Again, great dividend yield. I think the company is still undervalued at this price, but later in this video, I'm going to cover 2 specific stocks that I present a good buying opportunity in today's market. But you can see Prudential. I covered this video. I made a video on Prudential as well. Same thing with Principal Financial Group. A lot of the finances and insurance stocks have been down or lagging with the total market, where the tech stocks has been growing much substantially than a lot of the other stocks. So the insurance, healthcare, and finance have been all lagging, and it looks like they're now catching up. You can see here they had a big day as well. Bank OZK, huge day, 8% increase. I've covered this stock as well at a lower rate, I think about $20 or something like that, when it had a yield of over 4%. So it's a huge day to day. Discover Financial, another stock I covered, and I bought this. I'm actually up almost 120% because I bought this stock around the March low. So I'm very happy how the performance here. The dividend yield right now is at 1.9, and me personally, I have like a 4% yield on cost. So right now I'm just currently holding these shares. I think is a little fairly too overvalued for this company, so I personally wouldn't be buying more shares, but that's just another company that I covered. And again, ABC. So the two stocks I want to go over a little more in detail is going to be Lockheed Martin and BMY, Bristol Myers Squibb. These two stocks are still undervalued at current prices. I've made videos of them in my previous videos, and they still have been kind of flat or kind of a little in a downtrend, but they still present great buying opportunities. So let's get more in detail on those. So you can see here Lockheed Martin, for the year 2020, they're expected to earn $24.50, which is outstanding, which is a 12% growth, even through the shutdowns and the chaos as 2020 happened. They still had expected to grow 12%, so that's still outstanding. But as you can see here, the price has been on a downtrend. Right now it's at $348.79. If we shorten this time period, you can see here the company will revert back to its mean of a PE of 16 or 17. You can have a total annual rate of return average of around 20%. 20% rate of return is outstanding. You could double your money in about 3 years, 4 years maybe, at that rate. So this is outstanding. Such a high quality company is right now it's undervalued with a PE of 14, where it should be based on a PE around 17. So not sure why exactly this stock has been on a downtrend when all the other market has been on the uptrend, but because of that, it gives you guys great buying opportunities. I personally been buying shares, and I'm going to continue to buy shares here because if it continues to go down, I'm just going to keep loading up because this stock is high quality company. You can see here it has a credit rating of A-. The yield, earnings yield of 7%. The dividend yield almost 3%. It's been growing for the past 7-8 years at a rate of around 13%. And analysts are expecting the next year to grow about 7%, and the following year 7%. So this company is still very undervalued. I think it presents great buying opportunity. And the next one, Bristol Myers Squibb, ticker symbol BMY. This is another company that I've covered, and I'm also adding to this one here. Bristol Myers Squibb, you can see here, they're expected to grow for 2020 36%, and last year they grew at 18%. So that's tremendous growth in earnings. And eventually with earnings, how it works is just because the stock is flat, but if earnings continues to rise, eventually that price starts to pick up as well. So this is what's called fundamental analysts. You got to look at the fundamentals. It's earnings growing, revenues growing, all the balance sheet and all this stuff. And obviously here, based on Fast Graph, earnings is expected to grow at 36% for 2020 and 17% for 2021. So if we shorten this time period, you can see here, Bristol Myers Squibb has potential of 63% annual rate of return. Now, I don't expect it to jump up straight like that, sometime next month or this year. What's going to happen is it gradually increases and starts falling, and eventually maybe next quarter or next year quarter, full year or whatever, the market is going to realize, wow, this stock is undervalued. They've grown revenue tremendously because of the acquisition they had earlier last year. So this company definitely should be in your watch list. Do more research on it, but it's definitely a buying opportunity right now, where a lot of the stocks have been going up. Lockheed Martin and Bristol Myers Squibb kind of been flat or on a downtrend. So this is why I think these two still present great buying opportunity. There's another A plus credit rating, low long-term debt to cap of only 43%. You can see here the past 4 or 5 years, they have a 20% annual growth rate. Next year expected to grow at 17%. The following year at 7%. So again, this stock has tremendous room on the upside to go much higher. You can see here, 40%, even at a PE of only a PE of 15 or 16, which is kind of fair for the market. PE of 15, 44% return annually. That's outstanding. And while you're waiting for that upside, you collect a nice dividend of 3.18, and they've actually increased the dividend last year at a very nice rate. I think it was 7%, 8% or something like that. But these two companies, Bristol Myers Squibb and Lockheed Martin, are both undervalued companies. I personally own shares. I think you guys should definitely look into these companies. They've been on a little downtrend or on flat, but all that does is give you time to buy more shares, because eventually the market is going to realize that they're undervalued and it'll start picking up. I hope you guys enjoyed this video. Again, if you're new to the channel, make sure to hit that subscribe button, and I'll see you guys in the next one.